Is Bitcoin a good buy right now? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. After completing KYC and depositing $100, you will immediately receive $1,000 worth of Bitcoin contract positions. What are the steps? First, simply click the link below to access this page. After completing KYC and depositing $100, you can choose whether you want to take a long or short position, which will be set up for you automatically. If the price moves in your chosen direction by just 10%, your initial investment will have doubled as you just deposit $100. Even if you incur losses, you can still withdraw the originally deposited funds. Now, let's get back to discussing the Bitcoin market. Looking at the daily chart, we can observe two instances of a rebound. Which two? The first occurred at this point, where the primary downtrend was followed by a secondary rebound. The same goes for the second one. When trading, it is crucial to identify trends and follow the overall direction. At least for the daily trend, I believe this is the case. So, how is the daily trend currently progressing? Let's start by examining a couple of simple indicators. First, we can check if it's making lower highs and lower lows. Currently, both of these conditions are being met. Moreover, there are two pairs to prove the validity of it. Additionally, we can look at the moving averages. They have transitioned from a bullish to a bearish state, as indicated by this crossover. Although the price is currently above the moving averages, it is possible that it's in a tug of war. But since the market is in a bearish state, we must respect it. So, based on the simple analyses we just performed, we can clearly determine that it is undoubtedly a bearish trend on the daily chart. Although it may not be a powerful bearish trend, it is indeed bearish. When it comes to trading, the best entry opportunity is not just about following the overall trend, but also about going against the smaller time frame trend, while following the larger time frame trend. This way, we can follow the trend and find good entry points. What does it mean to go with the long-term trend and against the short-term trend? For example, during the previous bullish trend, it was definitely a bullish period. So, when was the best entry opportunity? The long-term trend is an uptrend. Going long is a no-brainer. But what does it mean to go against the short-term trend? For instance, the time frame here is different. The upward and downward movements here differ in periods. Going with the long-term trend and against the short-term trend, we should consider entering positions around here. Of course, it's not possible to be extremely accurate, as we're not all-knowing. However, we can at least follow this principle of going with the trend and finding a good entry point. Now, what trend are we currently in? Undoubtedly, we are in a bearish trend. We don't want to enter when it's already declining. Usually, when declining, it's time to add positions. And when adding positions, we must progressively reduce the position size. For example, start with 500,000 and then reduce it to 250,000. Then 150,000, 100,000, and so on. This way, we can protect our original position. Currently, we can see that the market is in a pullback within a downtrend. It's a pullback, right? Also, we're following the trend, and our entry point can be in a relatively good position. For example, if you shorted at this point, the entry point wouldn't be as favorable. It'll be a different story if we are in this kind of position. Of course, entering a short position directly would still be somewhat of a left-hand side trading strategy. Of course, as we discussed yesterday, entering a short position directly, it's fine if you were being aggressive. But for now, it would be better to take another look before entering directly. If you do enter directly, I believe it wouldn't be a major issue. However, this approach would be considered more aggressive. Now we can see on the daily chart that it has formed a channel, and the upper boundary of this channel is crucial. We have 3 touch points here, confirming the validity of this channel. There are 2 points along the lower boundary, but this position is particularly important. If the price breaks through it, I believe we should abandon the idea of shorting in the short term. If the upper channel is broken, we should really give up shorting. However, if it's not yet broken, I believe that our bearish stance still has an advantage and opportunity. After all, the daily trend is on our side, favoring the bears. Next, let's assess the recent uptrend. Looking at the candlesticks alone, without considering volume, we can see that it has been quite aggressive. From the lower shadow to the upper shadow, with about a 10% gain. In terms of a secondary movement, How can we define it as a secondary movement? Well, let's take a look at the response or adjustment during this secondary movement. Where are the positions of the price drops and rises? Let's check it out. This is a drop followed by a rise. If we focus on the shadows or the real bodies, we can get a rough idea. It roughly hit the 0.618 level during the rebound, and it continued to make new lows. Okay, now let's take a look at the current situation. Currently, we are experiencing a rebound, which is even more precise than the previous one. This rebound perfectly hit the 0.618 level. As you can see, the wick hit right on the 0.618 level. After the 0.618 level, let's see what will happen next. Of course, I defined it as a rebound, but the volume is so small. If we compare it to the previous bearish volume, it's clear who has the upper hand. Now, let's switch to a smaller time frame. If we focus on the volume during this recent move, it's evident that the bulls have no advantage. Let's examine this section. What can you see? When we have the crucial candlestick, this is a strong price drop. Let's ignore it. This top candlestick has a long upper shadow with significant volume. On the other hand, the volume of the bulls diminishes during the uptrend. Furthermore, let's look at this combination of two candles. Both of them are 4-hour candlesticks. So it's a fair comparison. But you can see that the bearish volume of the right-hand side candle is stronger than the bullish volume on the left-hand side. And this 4-hour candlestick is not yet complete. This ranges from 4 p.m. to 8 p.m. And this ranges from 8 p.m. to 12 a.m. The current time is 11 p.m. So there is still one more hour for the candlestick to take shape. We can imagine how much volume can accumulate by then, and it definitely favors the bears. Of course, if we want to be more conservative, we can wait. We can see resistance at this level. Here, it appears to be forming double tops. It feels like a double top pattern, right? Also, the bearish volume is stronger. If it breaks below this level, it would be a very good entry opportunity, regardless of adding to positions or opening new positions. Now, let's zoom out. This time frame a bit. Actually, no matter how this upward movement unfolds, it doesn't seem like the start of a new trend. Why do I say so? Of course, I'm not relying on feelings. Some might draw it like, wow, it broke the trend line. But I believe that kind of drawing is meaningless. At this point, the insider knows the ropes, while the outsider just comes along for the ride. Drawing trend lines like this or like that, they both have touch points, right? Of course. I think the more gradual trend line is more representative. It has 1, 2, 3 touch points, and they are evenly distributed, with longer intervals between them. I believe it's valid. And it has 3 touch points, making it a valid trend line. If there are only 2 or 1, it's definitely not valid. So, is this trend line not valid? Well, I reckon that this trend line is invalid compared to the other one. Why? It has 1 touch point here, and another here, connecting to form a line. It's invalid. You might argue that it has 3 touch points. They are too close, so this one doesn't count. Additionally, if we observe this line, there was no increase in volume when it was broken through. Many people will. Of course, many beginners may think that they can draw a trend line like this. But that wouldn't be accurate. To be precise, there should only be one unique trend line, which is this one. Meanwhile, the other one I consider to be incorrect. Now, we talked about whether this upward movement could be the start of a bullish trend. If it is, what should we expect to see? We can get a clearer view from the 4-hour chart. Okay. Let's look at the comparison between bearish and bullish volume, as well as the strength of the candlesticks. When the market is in an upward movement, it encounters larger bearish candlesticks. However, looking back at a previous period, such as pulling back to this point, it's the beginning of a bullish trend. What conditions do we observe? Let's carefully analyze the market situation. In a bullish trend, the volume on the bullish side is generally stronger, and we see prices rising and volume increasing. And the pullback is a bit weak. You may argue that it doesn't appear weak either. At least, the bullish side is stronger than the bearish side, right? It's significantly stronger, indeed. The bulls completely overwhelm the bearish side. Only then can we say that there is a possibility for it to evolve into the beginning of a bullish trend. However, considering the current market situation, I believe it doesn't possess such characteristics. Therefore, I have not considered going long. And here, What is an overwhelming bullish volume? I believe this chart perfectly and typically expresses this concept. Bullish volume completely overpowering should result in a pattern like this, and it signifies the start of a trend. Does the current market develop such a scenario? So far, it doesn't appear to be the case. Well, some people may have gone long in this wave, but we're not discussing these smaller cycles. We're discussing the bullishness on the daily chart. Will it turn into a bullish trend on a daily level? If it will, reaching at least 35,000 to 36,000 in the next wave is certainly not a problem. However, at the moment, it doesn't seem to be the case. Now, let's take a look at the CME gap. As you can see, there is a gap here. Gap filling has a very high probability. And there are different probabilities. Some studies on the internet have shown that within a week, it's more than 90% of the gap will be filled. And within a day, it's around 80%. Some say more than 90% of the gap will be filled within a week. If the gap is filled, those who have gone long need to be cautious. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.